If you make small decisions, fine. But if you make bigger decisions, we're talking about hiring somebody, we're talking about quitting your job. And if you do that on gut feeling, that gets tricky. If you want to quit your job and go all in on your business and you're thinking, I think I can pull that off, that's on your gut feeling, and that's very, very dangerous.
Welcome to Create Your Own Economy with Bunmi Ajibade, the podcast that empowers corporate professionals ready to break free and transition into entrepreneurship with confidence and clarity, as well as business owners looking to grow and scale their businesses. If you're exhausted from building other people's dreams, leaving you little time or energy to focus on what truly matters to you, you are in the right place. Each week, we provide actionable strategies, expert interviews, and real-life success stories to help you turn your ideas into thriving business. Ready to take bold, clear steps toward life and business you deserve? Let's get started. Are you building a business while you are still in your 9-to-5 employment? We call you technically an employee entrepreneur. And you are struggling with your numbers. You don't know what the numbers are. You don't even know what you're supposed to be looking for. And how can you build a business if you have no idea what numbers are? Numbers are very important. So today I have a guest who has gone through this. He has had businesses. He is currently a founder of so many businesses with some other people, and he really wants to help you, introduce you to what you should be looking at so that you will know what your numbers are, what your numbers should look like before you even plan to exit and put a stop to the 9-to-5 and really go fully into your business. So today I have Rob Braake. Thank you so much. And I also welcome our viewers and our listeners. Welcome to Create Your Own Economy. I am Bunmi Ajibade. I am the catalyst for 9-to-5 employees or professionals becoming entrepreneurs. So today's episode is titled Financial Clarity First. Very important. I'm always talking about clarity and clarity in different aspects of the business. So today we're taking a microscope to your finance and what you should be looking at. And so that when you build your business while you are still in your job, you will have clarity, you have confidence, and you'll be able to execute and then be happy to live, not staying there forever. So let me say a little bit about Rob. Rob is the founder and director of Insight Matters, a fractional CFO and accounting firm dedicated to helping 7- and 8-figure online businesses transform their financial data into actionable growth strategies. And he's been doing this for over 15 years. So when he quit his job, he co-founded and built several green tech businesses over a period of 7 years. And he's currently based in Lisbon, Portugal. I'm thinking of going there to visit, and I will reach out to him and say hello. And he is currently leading a team of over 20 professionals across 13 countries. This is a very busy man who has passion to support new founders, even established ones. Rob has a powerful story. He started as a fractional CFO, and he realized that most founders didn't have reliable financial data. He got tired of fixing bookkeeping before he could do strategic CFO work. So he built the full service solution he wished he had as an entrepreneur. So he's been in your shoes. So, and even if you are not earning 7 to 8 figures now, because you still have your 9 to 5 job, this conversation will help you build the financial habits that create stability now and that you can use later when you are exit ready. So, Rob, welcome to the show.
Thank you. Thank you for having me. It's a pleasure to be here.
Yes, thank you so much. I love, when I have somebody who has been there, somebody who can feel the pain that people are feeling. So you are not talking textbook, you're actually talking real pain and how you solve it for yourself and how you are solving it now for other people. So the last thing I read about you said you got tired of fixing their books before you could even do your job. Right? So what was your own experience as an entrepreneur that you wish you had now that you are fixing other people's messes, right?
Oh, there's so many things that I wish I had or knew the first time I became an entrepreneur. When I started this as fractional CFO, the first thing I would ask any client is, okay, show me the books, show me your numbers, because then we can talk about what plans you have, where you want to grow, what you want to do. And I would get numbers that just didn't make sense. I would get numbers I couldn't trust. So how would anybody expect me to say, hey, this is a good idea or you should go left here if the information we're working with is unreliable? And I would get very nervous because apparently the owner was making decisions on numbers that didn't make any sense. So I think that's reckless and dangerous. So that's why I figured, okay, every time we have a new client, we have to start with cleaning up all the basics first. And I don't want to make this sound the wrong way, but I really did not like doing that myself. So that's why I started building a team, not because I wanted to build a bookkeeping business, but it was just too important to get it right, to leave it to whoever it was that was doing it at that point.
Wow. So one thing you said is new owners, they are always flying blind.
Yes.
What does that look like in real life in a business? What are the red flags that you see that make you say, oh, this is just, is as blind as a bat?
The typical symptom is if you make small decisions, fine. But if you make bigger decisions, we're talking about hiring somebody, we're talking about quitting your job. And if you do that on gut feeling, that gets tricky. If you want to quit your job and go all in on your business and you're thinking, I think I can pull that off, that's on your gut feeling. And that's very, very dangerous. Now, hopefully the numbers will tell you the story that matches with your feeling, because then, great, your feeling was right, the numbers support it, go do it. If the numbers and your feeling don't line up, you have to figure out which one is wrong, because that's where you make stupid mistakes, and those are typically also very expensive mistakes.
And you know that a typical entrepreneur, especially the new one, we are excited. I mean, is this idea? I know it will work. One, have we tested it? But we just go with our gut feeling and we feel, oh, it will work without testing anything, without matching the story that we have in our head with real numbers and see the gut feeling. Was I hungry that day when I had that thing, or what was my mind? Where was my mind when I came up with that idea? Can I support it? And I don't want you to think, our listeners, I don't want you to think that gut feeling is wrong. No, he said, if you have it, you have to match it with your numbers, with the story. There needs to be an alignment. And if it is not aligned now, you can park it on the side and come back to it. We are not saying you should let it go, but it's very important that you take real decisions that will move you towards freedom from working for somebody else. There's something else that you said. You said accounting is too important to leave to accountants.
Yes. The problem is, and for transparency, I'm not an accountant. My team does accounting work, but I personally am not an accountant. So I feel free to say this.
Yeah, let's go.
Most accountants don't know what they're doing. Most accountants do your books in order so that you can file your taxes. And that's important. Don't get me wrong. It's important to have your books ready, that it's in line with all the rules from the IRS.
Yes.
But the books are not just for tax filings. Your books, your numbers are primarily for you as the owner to make decisions, to see what's going well and what's not going well. So if you have an accountant that makes the books just for the taxes, they don't care about what level of data is in there, what level of visibility you have from that. It's just, is it compliant? Yes, this is your tax bill. Mm-hmm. And for you as the owner, let's say you're running an e-commerce business. You don't just want to see revenue as your total as just one number. You want to see, hey, my revenue for this product is this, and my revenue for the other product is that. Or my revenue on Amazon is this, and my revenue on Shopify is that. You want to have some level of detail so you have a sense for what's going well and what's not going well. For the tax accountant, that doesn't make a difference. Which channel the revenue comes from, or which product or which service you're selling. But for you as the owner, that's critical information. So if you leave that kind of data to a tax accountant who doesn't understand or doesn't care, you're going to get the wrong amount of information. So,
wow. Yeah. I can see that. I can see that. So it's not that they're not doing their jobs, but an owner cannot leave the decisions in their business to the accountant, because that is not their job. That is not their job. They can look at your book. They can look at losses and taxes, make sure that you are, your IRS is not after you. Yeah. You are compliant in different areas. Yeah, they can do that for you. But what Rob is saying...
basically...
Yeah, go on.
Sorry. The tax accountant understands what the IRS wants and needs.
Yes.
They don't understand what it means to run a business.
Yes. Yes.
So it's you cannot put too much responsibility on them, because they just don't understand. It's not that they're bad at their job. Like you said, it's not their job. It's a different skill set.
Yes, it's a different skill set, because you can take a number. I mean, when I was, this is what we did, when we're having some coaching conversations with entrepreneurs, we look at the number. You need to know, where is this number coming from? You are doing very well here. Where is that number coming from? What product is giving you that? This product, you paid this amount of ad, but what did you get from it? So it's the analyzing of the numbers, so that you are not just saying compliant with IRS and that is it, because you are looking at what comes in, what goes out, and do I have a profit? Yes, you have a profit. But what Rob is saying is that there's more to your numbers than taxes. Am I correct?
Yes. You're 100% correct.
So what is the cost of a messy book to a new founder?
Sorry, what is the cost?
What is the cost of a messy book? For them having a messy book, what will it cost them? Yeah.
Let me give an example. We were working with an e-commerce business and they didn't have their numbers that clear. And when we started working with them, we dove in and we realized 20% of their sales comes from a product where they're actually making a loss. So every time they sold that product...
Say that again.
Every time they sold one product, they didn't make a profit, they made a loss. So the more of that product they would sell, the bigger their loss would get.
Whoa.
So, and that data was there for at least a year, hiding in the mess. They didn't know. They thought we're growing, our sales is going up. Why are we not making a profit? Well, if you have 3 products that make a profit and 1 that makes a loss, it's pretty damn difficult to grow your way into a healthy profit if you're just adding more losses. So if you don't have the visibility where you're making a profit, where is your margin, where is your cost, you don't know what's going on, and you might make very expensive mistakes.
Wow. The cost of the product, the cost of running the business, the margins. I mean, it's so for somebody who doesn't like numbers, what will happen? Because some of us don't like numbers.
So I understand. The numbers typically is not the sexy part. But in the end, why do you run a business? You want the freedom, you want the income, you want the asset. You're building something, and that translates into a number. So I understand it's not the most intuitive and definitely not the most sexy part, but it is the most important part. Because if you're running the business and you're not knowing if you're making a profit, it's basically just a hobby. So, and there's nothing wrong with having a hobby, but you're trying to build a business so you can go all in on it and build something with longer value, with more value. Ideally, if you don't like the numbers, have somebody close to you that can feed you the information in a way that is that actually resonates with you, that you understand, that connects with you. If you, as a creative entrepreneur, talk with a tax accountant, those are two different languages. But talk with somebody who can make that translation, who can explain the numbers in a way that is relevant for the business and matches with how you look at the world, how you look at your business. Because it is critical that you understand it, but you don't have to become an accountant yourself to understand it.
So that is where you have the fractional businesses. That is where we have people like you that will come alongside a business person to say, this is the number, this is what it is. This is what you should be looking at. And I think, as I coach new business owners, as I coach people starting their businesses, what I really tell them is for you to have a 1 hour session, 1 hour paid session with a professional who can really help you in the part of your business where you are struggling, that amount that you are paid, that fee that you paid for that 1 hour will save you thousands in your business. You just have to do it. It has to be done. So talking about somebody who is starting a new business, they have a full-time job, they are 9 to 5, they are overwhelmed. Like most of my audience, they are overwhelmed, they have a full-time job.
Yeah.
What are the first 3 financial numbers they should track weekly for them to regain control? What are, might not even be 3, but what are some numbers you would suggest they track weekly?
Of course, revenue, but the revenue is also a bit of a vanity number. I would say gross profit and net profit. And gross profit is the margin you're making on every unit of sales. So it's on one product or on a service package, whatever it is that you're selling. And net profit is the gross profit minus all your other expenses, your marketing, your sales, your overhead, your rent, etc. I think those are the 2 most important ones. But rather than tracking the numbers, I think the biggest mistake that I see early stage people make is they make everything complicated. Mm. And don't get me wrong, it's good for me if you make it complicated, because if it's complicated, you're going to get lost, right? And you're going to need to pay somebody like me to help you. Yeah. So keep it simple. The simpler the business is, especially on number of services, number of people, like whatever dimension it is, the more simple you can keep the business, the easier it is for you to keep control without relying on people like me.
Again, when you don't like numbers or you don't want to like numbers, we make it complicated because we feel that the fact that I don't like it, it means it's complicated. So it has to be complicated. I have to make it complicated, and then I don't want to do it. Then I run away. Yeah. Right? But what I heard you say is that just make it simple. Yes. Your revenue, you want to look at the growth, profit on each product. And also you want to look at the net profit. Remove all your expenses, your overhead. Just make it simple. I use Excel spreadsheet at times to quickly plug in some things before I forget. Whatever you can use to make it simple, because you have a full-time job, you have a family, you have a community. Some of you are taking care of your elderly parents, you are taking care of your kids. So you have a lot going on for you. Keep it simple. And if you don't know how to keep it simple, you can hire Rob or his team just for an hour of their time, paid time, and they will give you a formula that you can go with. Does that make sense, right?
It makes sense, but honestly, if you're having a job and running a business on the side, you want to keep it simple because, again, complexity takes time to manage. Mm-hmm. And time is your biggest constraint. So better spend the time on making more sales than on adding complexity. Mm. It's the return on that is much, much higher. And yes, if you're getting to 5 million in sales and you're still doing your books in Excel, we need to have a conversation because that's a
conversation. Yeah. Yeah.
But in the early stages, it's not perfect, but if it's a simple business, it's good enough. As long as the numbers are accurate, that's fine.
Yeah. I mean, again, when you are studying, I would prefer you talk to somebody. Some of the mistakes I made when I was studying, that's why I'm so passionate about this, because eventually the Excel, when I started, I was able to write some stuff in there, but after some time, it wasn't enough. It was not enough for me to use. But start somewhere. Again, I will encourage you to reach out to somebody who can give you what you will start with. And if you are good at it for now, great. But as you are building your business and you are talking about your exit plan, I think it's better for you to look for somebody who can really assist you. So talking about exit readiness, you say that exit readiness is a 2 to 4 year process.
Yes.
So tell me more about that.
So when you want to sell your company, if somebody knocks on your door today and says, "Hey, I want to buy your business," 9 out of 10 people are not ready for that because their books are not clean. They are themselves very active in the business. So that both are very big reasons that will lower the value of the business.
Wow.
If you want to sell your business, you can clean up the books in 2-3 months. That's not a problem. But if you really want to build a story and say like, "Hey, this is the company, this is where we're heading, this is the long-term vision, and this is what we've built in the last few years, in the last 2 to 4 years leading up to this exit moment," you're having a much, much stronger story to a potential buyer. Because if you have a plan for what your company can do in the next 5 years, and you, for the next 2 years, actually deliver on that plan, so you hit your revenue, you hit your profit, then 2 years from now, you can tell a potential buyer, "Look, this was the 5-year plan, and it is very aggressive, but the first 2 years we've delivered on target. So it's very, very credible that the next 3 years, we're going to do this growth as well." And that's going to make the conversation from last year your profit was this, and we're going to pay you 3 times your profit, to, "Oh wait, it's going to do this profit in the next 3 years." And it changes the conversation about the value of the business. So planning that in 2 to 4 years ahead will make a very big difference on the exit value.
The exit value. I love the word story, because a business is not only about the product or the service that you render, is the story. What is the story behind that business? What is the story that you tell? What is the story that you sell? Because people will resonate with your story before they resonate with your product or your service. So that story is really important. So how can a founder be exit ready? What is the roadmap for them to be exit ready?
I think there's 2 things that are critical there. One is having a plan. Mm-hmm. And again, if you're currently in a job building a business, it might be a bit early to think about exits. But if that is your plan, if that's your ambition, make that plan. What are you going to do? At what point would you like to sell? At what valuation? And work back from that. Because if in 4 years you want to sell for, 10 million, work back. Okay, if it's 10 million, then we probably need to make 2 million profit. Trace that back to what does that mean for the next 1 or 2 years and for the next quarter. The second is you need to grow the business in such a way that it doesn't depend on you. If you are the face of the business, if you are delivering the service, if you are the bottleneck in every core process of the business, you're not selling a business, you're selling a job. And that's possible, but it doesn't come with the same level, the same valuation. Yeah. So firing yourself from all the daily things, having all the processes documented and organized so that anybody can come in, any capable CEO can come in and actually run it as good or maybe even better than you. That's when you're exit ready.
Yeah. So that is for businesses that are already established. So for somebody who still works a 9-to-5 job, what is the roadmap for them to be exit ready to go into entrepreneurship?
Okay. From that perspective, yes. I think the biggest thing is you need to have realistic confidence in the revenue and the profits for the next, let's say, 12 to 24 months.
12 to 24 months. Okay.
And that's not dreaming about, maybe I can double the business in the next 3 months. What is the credible, realistic path for that? Most entrepreneurs are notoriously optimistic, myself included. The first time I launched the business.
Yes, we are.
The first time I launched the business, I was planning to have a private jet in 3 years. Needless to say, that didn't work.
That didn't happen, right?
No, that did not happen. Not even close. So we're all too optimistic. And that's probably the only reason why we're crazy enough to do this.
Yes.
So you can and you should dream that big forecast. But if you're making big financial decisions about giving up your 9-to-5 stable income, you need to have the evidence that the company can actually replace that. And whether that is 50% of your salary or 5 times your salary, that's a very personal decision on like what income do you need and how much risk are you willing to take. But you need to have a credible path to replace that.
You look, this is one of the things that actually my book is ready. They're working on the cover. This is one of the things that is very important because we're optimistic. We know that everybody loves this product. Everybody loves this service. I cannot wait. And that is what makes us crazy as entrepreneurs, because it's like, we can do it. We can conquer the world. We can get a private jet in 3 years or 3 months or whatever. But the thing is, we have to, when it comes to finance, we have to have at least a year of whatever keeps you alive from that job. You know, how much do you spend monthly? And you should be able to replace that. You should have that in savings. And then the business, as you are running the business, monthly, whatever the profit from the business should be able to, that the net profit, right? The net profit should be a number that can sustain you. And remember, even all the profit is not yours, because part of the profit that you got, a percentage is going to be for your taxes, a percentage will be for investment, so whatever you paid yourself should be able to hold you, maybe double what you were being paid, your paycheck or whatever number you agreed on, and you should be able to have that consistently. And you said between 12 and 24 months before you even think of exit. Now, Rob, what I have seen is when people don't take this seriously, when they don't take this number seriously, they just wake up one day and they put in their 2 weeks notice, and then they say, oh, I know I can do it, and give them 6 months. They are back looking for a job, or they are back looking for a part-time job or a full-time job. So it's really very important that you have a roadmap, you have the number that you are looking at before you exit. So just want to wrap up here. If you could tell our listeners, if you could leave them with one principle that will stop them from flying blind, even if they don't like numbers, that will help them to make confident and smart decisions about their business, what would it be?
Keep it simple. The simpler the business is, even if you don't like numbers, if the business is simple, you can understand the numbers. Everybody understands that 2 is more than 1. If you add complexity, it gets harder to understand, and people that don't like numbers might get more, it's easier to put it off. Keep the business as simple as possible, because that makes your life easier.
Be simple. I know there's an acronym, KISS. keep it
Yeah,
something.
I
Keep it. So we know what I mean.
ignored the last S from that.
Right? Yeah. So as you're listening to us, before you go on with your day, before you watch another episode of Create Your Own Economy with Bunmi Ajibade, I want you to take like 2 minutes. Take 2 minutes, find out where your financial blind spots are. Rob has a free financial clarity scorecard. It's a 2-minute self-audit. Please take it for yourself. Take it for the health of the business you are growing. We have the link in the episode note. Just do that for yourself so that you are not flying blind. You are not complicating things, and you can go back to your business and see what will make you scale your business, what will make you really get that exit date. Schedule that exit date, because if you are not ready, you can't. So, but if you go and take that Rob's financial clarity scorecard with Rob, it will really help you, put you in a path. And if you need his support, reach out to him. All his information will be in the note card. And I remain yours, Bunmi Ajibade. I will see you in the next episode. Thank you for tuning in to Create Your Own Economy with Bunmi Ajibade. I hope this episode gave you the clarity and inspiration to take the next step in your entrepreneurial journey. If you're a corporate professional feeling stuck or unfulfilled, and you are thinking about starting your own business, but find yourself asking, how, what, where, who, or when, I invite you to download my special curated guide, Transition from Corporate Professional to Entrepreneur, the 10-step guide for success. This guide is designed to make your transition smoother and less stressful. Afterward, schedule a clarity call to map out your personalized success path. We invite you to write a review, like, and share this episode with anyone who needs this information. See you in the next episode.